Hi, welcome to D Street Analysis and Insights, a monthly video series on Indian equity markets. I'm Archit Singhal, Portfolio Manager, Equity Advisory PMS, Centrum Broking Limited. Today, I'll talk to you about the market update for January 2024 and key takeaways from 3Q FY24 results. Starting with the market update, while Nifty was flat for January, mid and small cap indices were up by 5 to 6%. In terms of key sectors, Nifty Bank was down by 5%, FMCG and media were the other sectors which ended negative. On the other side, PSUs, realty and energy were the key top performers. Auto, IT and pharma were the other sectors which ended positive. In terms of flows, FIS sold worth $3 billion in cash equities in the month of January versus buying off more than $6 billion in December of 2023. Moving to the key updates, the interim budget was announced on 1st of February. Overall, the budget was good. Key highlights were continued push for capex, where double-digit growth is expected in the capital outlay for FY25. Secondly, fiscal deficit as a percentage of GDP is expected to drop from 5.8% in FY24 to 5.1% in FY25 to 4.5% in FY26. In terms of global cues, US Fed in its meeting in Jan end paused interest rates for the fourth straight meeting while they are not indicating any cuts in the immediate future. US 10-year bond yield is close to 3.8% and Brent is close to $80 per barrel. In terms of valuations, Nifty is currently trading at a forward PE of 20x. Valuations have moved up after the up move seen in the market in the last 3 months. Moving to the next section, which is key takeaways from 3Q FY24 results. Starting with the financial sector, 3Q FY24 has been a mixed bag where loan growth has been healthy, but deposit growth has lagged and a few banks have seen a NIM compression. That said, valuations are reasonable and price to book is currently below 10-year averages. Moving to auto sector, most parts of the sector are in an upcycle. Volume growth is decent, margin expansion is happening and earnings growth has been resilient. Valuations are reasonable in context of the growth. Coming to IT sector, while 3Q FY24 results were weak, but stocks moved up after the results in anticipation of earnings growth recovery going forward. Valuations are slightly higher in context of last 10-year averages, but they're okay in terms of absolute terms. Moving to the FMCG sector, consumer sentiment has remained weak for the last few quarters, which has impacted the volume growth, especially for the staple companies. If you look at valuations seem high in context of the growth. Finally, moving to the pharma healthcare sector, US generics, the pricing pressure has definitely eased and domestic growth is good. Both these factors are resulting in a better earnings growth for the pharma sector. Valuations have also gone up in the recent past. Finally, moving to the outlook. In terms of key positives, earning growth has been healthy. Outlook is also good for earnings growth. Interest rates have kind of peaked and should start easing from the later part of this year. Concerns regarding inflation have eased and liquidity flows remain good. However, that said, valuations have also inched up in the last few months. There are some pockets where sentiment is indicating some exuberance. Because of that, I think investors may remain selective in stock picking and may look at a combination of good growth at a reasonable valuation. That's it from my side for today. Thank you for your time and I'll see you next month.
Investments in securities markets are subject to market risk. Read all related documents carefully before investing.